Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at a special Bitcoin chart pattern that no one is watching and why you can't afford to ignore it. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. And before I begin into the technical analysis, I just want to wish everyone the happiest of all holidays. Okay, I'm just going to start with just clearing up something which I mentioned in the last video, and that was the 12-month chart. And I mentioned that this particular 12-month candle that we're on now, which finishes on the 31st of December, that we have to really get above the top of this candle here, which is 46,202. If you've been watching my videos, you'll know that I don't say anything definitive because this is not a definitive game. The game of investments is a game of probabilities, possibilities, and nothing to do with certainties or guarantees. So just because this candle doesn't close at 46,202 and above, it doesn't mean that the price is going to do this. It just means that we need to be alert. It just means that we need to be aware of what's happening in the charts, because we could easily get caught out in a bullish mood, especially with the narrative of the ETF. So all this candle is saying at the moment, while it's below the 46,202, is that it is not as bullish as you may think. And of course, if this does close below the 46,202, it can still quite easily print a big candle over here for the next 12 months. Of course it can. It's just something we need to be aware of. And always remember that no one indicator, no one oscillator, no one candle is powerful enough to drive the market. They all feed into a particular overall view, which then determines an outcome. And this is just one thing to pay attention to. And we still have 6 more days for this candle to get above the 46,202 anyway. But today what I want to do is to actually look at the next time frames from the 12-month candle that we're looking at here, because there's some real developments going on, especially on the 3-month chart, but I'll also show you the 6-month chart as well. So what is this special Bitcoin chart that no one is watching? About a year ago, I actually started looking at these candlestick patterns, and I haven't revisited them for quite a while. So I'm going to go through an amazing pattern that is developing on the 3-month chart, and this candlestick pattern is called the hikkake pattern. If you want to know exactly what it is, just read all this down here. If you scroll down, you'll see all the actual characteristics of this pattern, and it's really about a 4 to 6 candle pattern setup, and we've got this exact pattern on the 3-month chart and why it's extremely bullish. So here you have it. So what you have is a long bearish Marubozu candle over here, and that's followed by a candle which the top and the bottom of which is actually engulfed within the previous candle, and then you have a lower high and a lower low. So this gives the impression that we are going to go lower and catches people out. So this is one of these candles which you call the shakeout candle, where people think it's going to go lower and then they go out of the market thinking that we're going to go lower and we can buy the price down here. And this is what caught a lot of people out at the end of last year. And then this particular candle, once it's shaken everybody out, all the weak hands. So as I said, this is a candlestick pattern that involves between 4 and 6 candles. So you've had the first candle here, number 1. You've had the second candle here, number 2. And then you've got this third candle here, which is number 3. So within the next 3 candles, this pattern has to get above the top of the second candle, this one here. And we got that within the 4th candle. So this could have happened in the 5th and the 6th candles, but because of the bullish nature of this current market, we made it on the 4th candle rather than the 5th or the 6th. So once you go above the second candle, we now know that the next few candles, anywhere between 4 to 6 candles after this, are going to be extremely bullish. And this is exactly what we've got. We've broken above the second candle, consolidated for 2 candles, and now we're breaking out in this current candle with a big Marubozu candle here. So really this should be followed by a series of either consolidation candles before we have another big leg up, or we're going to get a big candle here. And if we did get this here, then that would put a left translated cycle firmly on the table, because the one after this could actually break the top of the previous all-time high. This is what we've got to keep an eye on, and no one seems to be looking at this particular chart or this particular pattern. And if we move on to the 6-month chart, we have something similar developing with a bullish setup, and that is, once again, what we've got is a bullish outside bar engulfing candle. And as per usual, this is followed by another bullish candle here. So what we would expect for the next 6 months that would take into account the ETFs and the halving is that we are more than likely going to get a break above this candle here, which would take us into July 2024. So this particular candle pattern would give you a third bullish candle here. Now that could be just above the top here, but certainly we should close above this candle here. So whenever this closes in a week's time, should with a higher probability close above this one here. So what we have is a bullish setup creating higher highs, and we should get another high over here with either a small green candle or a larger green candle that would maybe come and retest the all-time high at 69,000. So there you have it, the longer term, bigger picture that no one seems to watch. We've got the 12-month candle, which is slightly bearish, but we've still got 6 days to go. Then you've got the 6-month time frame, which is showing quite a bullish pattern, and the 3-month time frame, which is showing an incredibly bullish pattern with a higher probability to break out for the next few 3-month candles to break to the upside. Okay, moving on to the 60-day cycle. We still haven't confirmed this bottom here yet, and that's why I've still got the question mark on the 60-day cycle. And to confirm that, we need to really break the 45,000 level here. And we may even get a second bottom to create a double bottom here before we move to the upside. So that is still entirely on the table here. So we're still within this range of 40,000 and 45,000. But having said that, if this is the bottom here, then we're at the start of a new cycle, which is going to take us above the 45 to confirm that cycle start and make higher highs going into the midpoint of this 60-day cycle. So this particular 60-day cycle will actually be ending around about the middle of February. So with the ETF narrative still playing out in the background, and no matter what anybody says, the ETF narrative is what's been driving all this share price over here. So the way I see this playing out at the moment is that within the next 2 to 3 weeks, with the ETF approvals on the horizon, sooner or later we're going to break the 45,000 mark here. That could be after we come back and retouch the 40,000 to try and shake out more people before the big move up here into the 60-day cycle midpoint. And that could well be a sell the news event for a short while at least anyway, and then drive the price much higher into the 60-day cycle endpoint, where we should then get a 60-day cycle drop like this one here, and this one here, and this one here. And what that would do is to actually create a higher high from the previous cycles here. And that would be a bullish trend that would take us towards the end of 2024. And of course, there will be oscillations along the way. There always are with Bitcoin, because it's trying to shake people out of the market. It's trying to get the weaker hands out of the market and the firmer hands into the market. And that's what drives the market. Okay, I'm going to move on to something very interesting, which I wasn't actually planning to show in this video. I was going to show you this in the next video. But what it is actually, if you look at this particular chart pattern on the weekly time frame, and if you draw a line on the support lines going back here in 2020 through this support and this breakdown here, if you draw a line all the way through there, this was actually a very important pattern. This was the head and shoulders pattern that we got, which actually broke to the downside in the bear market down here. So if you take that line and extend it all the way to the current levels here, we're coming up to that line at the moment, and that would suggest a price of around about 47 to 48,000 here. But what's interesting is that if you draw an arc taking into account this strong support and then this strong support, and you draw that arc all the way, it actually breaks this trend line at around about the 49,50,000 mark. And this happens to be exactly where the 78.6 line is over here, this white line. Price is now weaving itself in this arc and in this trend line. So sooner or later, we have to break this. And I'm just wondering whether the ETF news is going to shatter this line to the upside here. it is of course a continuation pattern to the upside. So something quite interesting, when you just draw a few lines and look at the analysis, it gives you a little bit of a picture of what could possibly develop here. Okay, I'm going to move on to the strategy part of this video. Very, very important. And always remember, there is no one strategy that trumps any other strategy. There are hundreds of strategies, many of which lead to the same outcomes, but there are also bad strategies as well. And no one knows whether that strategy is going to work until it actually happens. So if it works out, then obviously it's a good strategy. And if it doesn't work out, it's a bad strategy. And that's how it is. So I just wanted to share my thoughts. So this is not the be all and end all of all strategies. This is just my one person's thoughts of how I'm playing this and how I see the whole of this bigger picture view here. So as you know, if you've been watching my videos, I take a 4-year view, and in all of the previous 4-year cycles, over here, and over here, and we're in the 4th cycle at the moment here. And each of those cycles has played out in a similar way. So for me, I always look at the historical narrative and use that as a very firm foundation for my strategy. And that is that the current 4-year cycle, having got in at very low levels in the Bitcoin miners, not in the Bitcoin, but in the Bitcoin miners, having got in at the end of last year, I've been riding all this. I have a buy and hold strategy. And if the opportunity arises to actually add to that, then I would take that. For so far, no opportunity has really arisen. So what I see is that for the next 2-year journey towards the end of the expected bull market run in 2025, this is what I will probably do with my long-term portfolio, to just hold all the way through here. But also keep an open mind, because my philosophy is always to be neutral, flexible and fluid, and not to get stubborn in any particular narrative. When the price action is telling you one thing, then you have to respond accordingly. So this is the overall bigger picture view of the 4-year cycle, and this is my strategy. So having bought, I'm just going to be holding all the way to the duration of the end of the bull market here. And on a shorter term time frame, so with that long-term strategy of buy and hold, I keep a flexible approach by using 2 methods to add to that long-term portfolio. And how I do that is what I've been sharing with you over the last many months now. And that is, I have a method called the ratios method, like the marathon and the cipher chart. So what we have is certain patterns that develop amongst the miners, like this pairing of marathon and cipher. You can see quite easily with these oscillations, they go up, they go down. And just by moving from one to the other, what you can do is to increase your positions along the way. So currently we had this big breakout at this point. So we're just waiting now to come back within range. And once this price comes back down to these levels, we're going to be back in profit again and be able to swap from one to the other, anywhere down here in this region. And that is what I call a safety first policy, because with this particular strategy, you are selling one and immediately buying the other at a favorable ratio between the two. And this way I've been able to increase my positions by well over 60% now over the last 8 months. So that's one way I've been able to add into my long-term portfolio over the last 12 months. And the second way I've been able to do that is to use the 60-day cycles to get into swing trades. And last week, based on the 60-day cycles here, and because the Bitcoin miners decoupled away from the Bitcoin price, i.e. as the price has been actually consolidating with Bitcoin, the Bitcoin miners have actually been going and catching up, because they fell behind from here. When Bitcoin was going up, the Bitcoin miners were going down. From July up to about October, they went down by between 60 and 70%, whilst at the same time Bitcoin went up. But now the Bitcoin price, as it's been consolidating, the Bitcoin miners have been now catching up. And based on that narrative and the potential start of a new cycle over here, because we use the starts of each of these cycles, like this one over here, we've managed to get into swing trades with the Bitcoin miners and increase our portfolios by a huge amount over the year. Before I come to the current swing trades, so you can see that in the round 1 swing trades back in March this year, these were the results we got with all of those swing trades. And in round 2 from July, we got these results here. These are amazing results, 56, 85 and 86%. In round 3, we got stopped out because we had 2 failed cycles for Bitcoin and the Bitcoin miners didn't respond. And recently in the round 4, which started in October, we achieved these results which was 7.5%, 33%, -5%, 57%, and 8%. And in the last week's video, I mentioned that we're getting into the round 5 swing trades, which started only 5 days ago on 20th of December. And so far, just using the 60-day cycle as the starting point, so in this round, we've actually gone into 5 Bitcoin miners here. And the results so far are 8%, 16%, 27%, 0% and 47%, and that's within 5 days. And obviously we've still got quite a bit of the 60-day cycle to go, so no one knows how far it's going to go, but certainly it started very well so far. So using the swing trades as well as the ratios method, I've been able to add into the long-term portfolio throughout this year, and we have 2 more years to go for this journey. And this successful method is something I'm going to be using with the Bitcoin Miners private club that we have here over the next 2 years. So currently what we have is we've just started a new 60-day cycle. We're early in that cycle, so on a game of probabilities, I'm now expecting Bitcoin to be consolidating here before a breakout to the upside over the next couple of weeks. So for me, there's no reason but to sit tight and actually evaluate what happens post the ETF approvals, which we're expecting with a high probability. So currently we're in the early stages of the miners swing trades, and one of the reasons why it's not a good idea for me anyway, and I can only share what I'm doing, everybody has their own risk reward tolerance, and obviously I can't provide financial advice because everybody has a different time frame, a different risk reward tolerance, and also different emotion levels. But based on a potential left translated cycle, i.e. the top being around 2024 rather than 2025, it may prove prudent to just buy and hold rather than to lose positions with a view to buying back at a lower price. And adding to that long-term portfolio by the ratios and the swing trade methods seems to be so far quite a successful strategy, and only time will tell at the end of the day. And my main objective is to really try and outperform in the safest possible way. So far, round 1 to round 4 have proved very successful by adding into the long-term portfolio over the last 12 months. And for me, there's 2 more years to go for that successful strategy to continue. And who knows what we can achieve over that 2-year period. And if you want to join us on that 2-year journey with the long-term portfolio and analyzing the ratios and the swing trades methods to increase that long-term portfolio, and the normal types of things we do there is basically looking at the Bitcoin analysis like we do here, but also look at the 60-day cycles with a view to finding swing trades with the Bitcoin miners. And we have the Bitcoin miners divided into the top 3 tiers, i.e. tier 1, tier 2 and tier 3 companies, and the exchanges that we trade on. And this is the actual objectives that we have to basically add to the long-term portfolio by the use of the ratios and the swing trades over the next 2 years. Now, if that sounds interesting, we just have 2 more spaces left until the end of the year where I'll open up a few more. And the cost to join is just a coffee per week at $12.99 per month. Okay, we'll leave it there. Hope you found value in the video. If you did, then please do remember to click the like button and to subscribe if you haven't already done so. Until the next time, have the happiest of all holidays. I'll see you in the next video. Bye for now.